Right, good afternoon for those of you still awake. Pretty quiet market so far today. Those eagle-eyed viewers will appreciate that it's not me speaking today. It's sorry, not Jerry speaking today. It's me listening to myself on YouTube. Yeah, Jerry's not at it today. He's got COVID. Hopefully, we all can get him a speedy recovery so he can cheer on England on Saturday night, which I'm sure he will appreciate. Yeah, let's have a look at what's gone on in the news. First of all, we've had a prisoner swap out of the US. So we've had, Brittany Greer has been swapped for a notorious arms dealer, Victor Bout, as a kind of high-profile prisoner exchange, which initially was kind of dealt quite well with the markets. There seems to be some negotiations going on, some chat between diplomats in Russia and the US, which is a little bit unexpected, but that is kind of the big news that we've seen through today. The other one is the Keystone pipeline in the US has had a leak today, and that is why we're seeing oil, until the open at least, having a lovely move up. We were up about $2.50 in the swing from low to high there, but since the open at 2 o'clock, we've given a chunk of that back, perhaps a little bit overdone on the momentum to the upside on that one. Wells Fargo have been out today with a few comments, if I can find them. Yeah, they forecast that global GDP growth will be about 1.7% for 2023, so still in positive territory. They were out with a few more bits and pieces. They've already dropped off my screen. The other news on data is we were hopeful to get something going today, right? Because that means if you look at the moves that we've seen in the DAX and the European indices today, it was incredibly slow on the open. We had about 20-tick range early doors on the DAX. We did manage to break those lows, and it kind of gathered back into the point of control, rejected it a little bit again. Very, very choppy in the stock market. The FTSE even more so. We kind of created that early move, and we haven't broken out of that range since then. So very quiet. Do be warned that we are in December. Markets do tend to quieten down a little bit, but don't be scared. We do have some data coming out tomorrow. We've got the core PPI and the PPI headline figure out at 1:30, and the University of Michigan coming out at 3 o'clock. But fast forwarding through to next week, and there's a lot more in the calendar here. So this will hopefully give us our last big week of trading for the year ahead, for the rest of this year. CPIs in the US on, where are we? Yeah, Tuesday, 1:30. We've got the US interest rate decision at 7 o'clock on the Wednesday. This coincides actually with if England do manage to miraculously beat France on Saturday, when the semi-final would be. I wonder how many people will get on our Zooms for that at 7 o'clock on Wednesday night. Well, let's see if England can beat France first before we need to worry about that one. And then fast forwarding through the rest of the week, we've got Swiss National Bank, Bank of England, ECB, all doing rate decisions on Thursday. In the afternoon, we have the retail sales out of the US as well, and then the Fed manufacturing index too. And not to be undone, the rest of the week is PMIs, but that might bring us to a close for the year. That might be my last trading day of the year. Not expecting there to be much in the week commencing the 19th. But yeah, let's have a look at the data that came out today. We were hopeful that we might get something out of the jobless claims. There hasn't been too much in the calendar. A forecast of 230,000 jobs, and sadly, an exact hit, 230,000 jobs created in the US. So very little to get your teeth into from a data perspective, at least today. So far, very, very sleepy. And I'm saying that because we've had some actual sleep in the office today from people who will remain nameless. You can probably guess, if you've been in the office, who that might have been in the corner. But yeah, sadly, no footage was taken. In terms of what we're expecting out of these markets today, we're around a kind of key high volume node on the S&P 500, literally at 52s. We came off this quite nicely on the open yesterday and rejected it. And we're still at that high volume node right now. So that could be a point of interest. Below, we've got high volume node on the Dow and on the S&P and on the Nasdaq. So we're about 40 ticks away from it on the Nas. Where are we? About 60 ticks shy of it on the Dow. So there could be some areas of interest on volume. That these sort of quiet days tend to be a little bit more technical. If you have a look at what happened in the DAX today, we were trading off value lows, value highs, point of controls. All these kind of high liquidity areas are perhaps more in play on a day when things are as quiet as they are currently. So that's where we are at the moment. One thing of note, I mentioned the PPIs that are out tomorrow. Normally, throughout the year, you get the consumer price index comes out before the producer price index. So it's a little bit less. And generally speaking, the PPIs are slightly less impactful, obviously. But this time around, we have the PPIs out first. So, and this happens rarely, but about a couple of times a year. But when PPI does come out first, it gives it a little bit more credence. And we might, for those of you who traded PPI before and seen very little moves on it, yeah, I agree that does normally happen. But the fact that we're now seeing PPI first might mean that this figure at 130 tomorrow might be a little bit more important than we've seen before. So yeah, if you look at the general trend on this stuff, it has been kind of getting back towards kind of parity really after that kind of flash up in 2021 and those big moves up in April at the start of the year. But yeah, the month-on-month headline PPI has been kind of flip-flopping around zero the last 4 months. So this could easily give us a tell on how big CPI is going to be on Tuesday, and obviously the Fed meeting on Wednesday. That's going to be any tell that you can get on interest rate decisions is going to be pretty handy. Based on that as well, we obviously always have a look at the Fed rate monitor tool. We've seen throughout the course of the day this probability of a 75 basis point hike has actually reduced from this morning at 24% down to just shy of 22%. So it feels like there's a stronger possibility of a softer rate hike. That 50 basis points priced in, the probability of that happening seems to be increasing today. So that might give a little bit of fuel to the upside on indices, given there is still a 1 in 5 chance that the market's predicting that we could get a slightly more hawkish 75 basis point hike from Powell on Wednesday night. So yeah, that's probably most of the things to get through for you today. As I say, days like this this isn't a Friday, but it's kind of a don't do your ass on a Friday style trading environment. You don't want to really overdo it on days when markets are traditionally quite quiet in December and when there's very little to get things lit. So unless we get a real kind of move on the open, and yesterday was a good example of drop as well in the US. We had this kind of range established pretty early, and we didn't really trade outside of it for the remainder of the day. The follow-throughs have been few and far between in these markets. Hopefully, with it being a Thursday, there is still hope that we get some real action on this. But if you want something that is moving, then yeah, the oil market might be your go-to. We are getting plenty of volatility there, and it has behaved itself a little bit around high volume nodes as well. So let's see where we can get to the open. I'll see if I can get another 2 or 3 minutes of intel out for you before we look to the markets. Maybe let's take a look at the order book for the ES Mini, the mini S&P contracts traded through the CME. So you can see we've got a lot of orders up here at that 3972. So that's just to kind of calibrate that towards your current price. That's about 20 ticks, just shy of 20 ticks north of where we lie. There's not too much below in the order book either yet, so it'll be interesting to see if this does sell off, where it can get to. I mean, the big orders below, that was 411, sat all the way down here at 3900. You often see these round numbers. A lot of orders are placed around here. Yeah, curious to see if we get that far today. It doesn't feel like it, but markets can and often do surprise. The Nasdaq, on the other hand, this is slightly more bid beneath. We've got a decent number of contracts. Obviously, it's not quite the same scale, but we have a lot of orders around 15 ticks lower than where we are currently. So this could be an area of long interest if we do get a spike to the downside on the open. Yeah, maybe we can switch this over and watch the order flow as we approach the open, as we get the first trades of the day coming through. But yeah, just to put those lines in the sand on the S&P, we're pretty much at that high volume node. We have kind of broken above back into the monthly value area range. So if this can sustain, there is quite a big gap in the number of trades taken. You can see it here on the weekly profile. Very little trading done in this range here. If you can get above kind of like 3960, 3970, there is clear air ahead to get back into what was the point of control earlier on in the week, around just north of that 4,000. Maybe this 4,000 figure would be a good place to look, given that is the value area high of the week as well. So yeah, could be some action. Hopeful that there may be, but yeah, not certain that we'll get it for the time of the month, time of the year that we're in. So let me share the screen with you, and I'll bring through as we approach the open, and we'll see what these markets can do. Any other news I'll try and dig out for you? The government of Germany, Hesse, has not yet as a successor for the Bundesbank board member, Johannes Beermann. Riksbank Sloden says the corona depreciation is not motivated. The Turkish Maritime Authority, this is quite a big story in the oil market at the moment. They continue to block passages of tankers without the appropriate insurance letters. So there is a bit of a backlog in that region. And yeah, the jobless claims have already been through. Much else, the Saudi Arabia, China have signed a deal, the Mao deal, on hydrogen energy together today as well. So they're showing a little bit of unity. I know India has obviously been looking at picking up the slack from all the oil that Russia's selling. So that's maybe distancing themselves from the West. So a little bit of action there. But let's see what we can get out of the orders. So we had that order taken out quite quickly on the Nasdaq. Let's zoom in a little bit on the S&P. You are seeing a slightly heavier orders on the upside currently on the S&P. But these move very quickly at this time in the market. There's a lot of volatility as you expect at this time of the day. Initial bit of selling, got the cumulative delta on as well, so you can see more buyers versus sellers seems to be creeping in. Or it started on about 31,000 here. So let's see if that can get stronger or weaker. Still trading around the number of contracts, although it started to creep alongside as the buyers seem to be stepping in. A decent volume, 1,500 contracts traded. At that price. Where are we at? 54s at the open, so pretty hefty, but more sellers than buyers in there. Looking at the ratios on the red of sellers versus the green in the buyers, but pretty neutral open on the S&P 500 at least. Nasdaq not giving us a come out either. I've completely dragged my chart over and show you what's going on in terms of price action. We've just tagged that value, that high volume node on the S&P, and pushed off it. Perhaps we'll be hunting down towards this 115.15 level on the Nasdaq as well before we get some liquidity from the other side. We saw that yesterday on the open. The S&P rallied up and hit this high volume node, and then the Nasdaq went down and hit its high volume node and bounced. So you can trade these sort of ranges quite nicely if you're looking at them as an aggregate between the S&P, the Nasdaq, and the Dow. I see the moving, a little bit of selling coming through, as we saw that those orders were still there, but they have been pulled, but they are starting to bring them lower, and that can be quite constructive for your bear positions. If you do have orders that start to get moved down closer to price, it shows there is interest to the downside when the orders keep getting lower. We're not seeing the same real action. The Nasdaq, the NQs aren't ever really quite as clean as the volume that you see in the S&P, so not too much to take from this. But yeah, pretty muted open. Given it's been such a quiet day, I'll probably leave you guys to it. And yeah, see if you can join us again on Tuesday at 2:20. That will be after the CPI at 1:30. So make sure you've got that in the diary, because that will likely be the big move I would have thought for these markets over the next